Good afternoon. Welcome to today's live panel, Nasdaq Nordic listing and cross-trading on the US OTC markets, creating a global solution for investors and opportunity for Nordic companies. The theme of today, reaching American investors, is usually a big focus for life science companies, be that private or public investments. And we're going to discuss some of the best strategies for gaining access and exposure to American capital. I'm joined here today by Lena Wange, Head of Investor Relations at Orexo. We're having, as is the new normal, we're having some difficulties on the Zoom. So Lena's audio only, no video, but that's okay. I'm also joined by Adam Kostyal, Senior Vice President, Head of Listings at Nasdaq Nordic. And some of the questions for discussion today are going to be when a company should consider going public on Nasdaq Nordic or First North, when a company should consider cross-trading on the US OTC markets, how does OTC markets and Nasdaq Nordic businesses complement each other, and what does that mean for Nordic issuers? What are the benefits of gaining access and exposure to American investors through the secondary US OTC marketplace? And from a company perspective, what does this exposure mean for your business? How can cross-trading increase volume and liquidity on the local exchange? And what does greater access to US investors really mean? That being said, I really appreciate everyone who is joining us live today via Zoom and the webcast. So thank you for joining. And, we can, go through a quick round of introductions and get to know the panelists a little bit better. So, mind, a little bit of background and, please introduce yourself.
Should I start? Sorry, or then.
Yeah, if you wouldn't mind giving yourself a little bit of background.
Yeah, so I can start. Yeah, so my name is Adam Kostyal. I head up our Nordic listing franchise offering for both, our Nordic markets, which includes Copenhagen, Stockholm, Helsinki, and the Baltics, and Iceland as well. And on these markets, we have both First North and we have main market. But I also work a lot with the European offering, which has traditionally been helping European companies either list, primary list or dual list in the US. And on an average, from a year-to-year point of view, we have roughly 10 to 15 European companies that choose to go that way. We have seen an increased appetite from the Nordics, and of course that was made visible by the recent dual listing of Calliditas, and then we've had a number of other Danish companies that have dual listed recently as well, and also primary listed. So happy to discuss this topic, very relevant, and hopefully I can provide some insight.
Thank you for that. And Lena, if you wouldn't mind giving the folks in the audience a little bit of background on yourself.
Yeah, thank you, Joe. I'm Lena Wange. I'm leading the IR and corporate communication activities at Rexo. And I will give you a very brief introduction of our company. Orexo was, until recently, a pure pharma company with a pretty good, strong record of developing products. But since the start of the company in Uppsala, Sweden, 1995, we have succeeded to develop 4 products that has got a worldwide approval. Last year, we took a very important step to broadening our company to also include digital therapies. And that is because we have a very strong belief that digital therapies will be an integral part of the future life science landscape. Foremost, we are helping patients that are suffering from health issues, but also substance use disorders, such as opioid addiction, which is one of the largest health crises in the US ever. And comparing to many other listed companies in the Nordics within our sector. We have a commercial platform in the US, covering more or less all states. And from there, we commercialize our lead product, Subsol, for opioid addiction. And since July, we are also offering two digital therapies, Vorvida and Deprexis, for treatment of alcohol misuse and depression. And finally, I would like to highlight that we have a profitable pharma business, and we have a strong cash position in the group. And we are listed at Nasdaq OMX and also available at OTCQX market in the US. Thank you.
Thank you, Lena. And as background on myself, it's an honor to serve as moderator today and help facilitate this discussion between Adam and Lena. My name is Joe Coveney. I am a vice president on the corporate services team at OTC Markets in New York. And I am focused on working with publicly traded Nordic issuers who want to increase their visibility and tradability to US investors. For context, OTC Markets operates the US equity market for securities not listed on a national exchange. And there are over 10,000 securities that trade on our stock markets. We segment the market based on issuers' level of financial strength and disclosure. And we operate 3 different stock market tiers. OTCQX, where Rexo trades, is the best market, the highest market that we operate. OTCQB is our venture market, our middle tier market for smaller, more growth entrepreneurial type companies. And then we also operate the pink open market, which is the bottom tier market. And our mission at OTC Markets is to create better informed and more efficient stock markets for issuers, to provide liquidity and execution services for brokers and investors alike, and to empower companies to improve the quality of information available to all market participants. So with that being said, and for all the biotech companies in the audience today, it's a good place to start would be with Adam. Question for you. What is the right stage or the perfect time for a biotech or life science company to consider going public, and or do an IPO on Nasdaq Nordic? Given the quality reputation of your exchange as a leading destination for the capital markets in the region, it'd be great to get your perspective on this.
Yeah. So focusing on the Nordics, I think what has been exceptional with the Nasdaq First North market is really that we're able to cater to various ranges of development areas. I mean, ranges of companies that are at different stages of development. So we have a lot of, 60% of the companies on Nasdaq First North, in particular in this sector, are pre-profit. So from that perspective, there is an overall appetite from the investors to engage around the public markets. Unfortunately, I think one of the key drivers where companies are coming to our market is there's a lack of VC capital. And I think overall that has improved, but it's still a struggle. So from our perspective, I think what is important is that companies have the governance in place and the predictability in place to manage the capital markets. So it's, of course, each company is fundamentally different in this sector, but having that engaged dialogue with investors and to make sure that the companies, the investors are so up to speed with regards to what are the key KPIs, what are the key development areas that this company is looking to achieve, and to have developed that dialogue ahead of time before going to market. And I think that's going to be relevant for the US discussion as well, because what I think is key here is that you don't really sort of just show up on the market. You have to have developed a good relationship and a good dialogue with the potential investors, and then transition into the market. Because at the end of the day, Nasdaq First North is essentially there to help companies manage growth capital. So it's a replacement of VC capital in many ways.
Gotcha. And what are some of the at a high level, some of the things issuers need to understand about process, timing, considerations, when they are looking to go public, how does that work?
Well, I mean, first of all, it's not the exchange per se that does the IPO, it's the advisors. So there's a whole range of advisors, legal, financial, auditing, that are engaged in the process of preparing and helping companies getting ready. I would encourage companies to contact us early on in the process, because we can help them navigate with whom, or rather which advisors are typically engaged in this space for this type of company, for that size of company. And we can also give an insight in terms of which requirements we particularly look at and how the process looks from our end. At the end of the day, I think it's good for a company that is, is getting some traction, has the growth momentum, is building up expectations amongst its investors, that they early on in the process do a gap analysis with, for example, their auditors or their legal advisors, to understand what is the gap between now and them being a listed company. Because the benefit that this sector has is that it has to have, there's a regulatory scrutiny on these companies, there's a financial scrutiny on these companies. So this type of company, even though early stage, typically has a lot of processes in place which are aligned with the requirements that we set as a listed entity.
Gotcha. And I think it's, truly remarkable to see the continued momentum coming from the region, especially given, the coronavirus times. You've been able to help companies with a string of successful IPOs, not only on the Nasdaq Nordic main board, but also on the First North, as you mentioned. What do you attribute to this, and what's your outlook for the rest of the year going forward?
Well, I think it's this sector has always been a predominant sector for us, not only here in the Nordics, but overall. If you look at all exchanges, the healthcare sector, the biotech sector is typically one of the most active sectors. What is fascinating with this sector is that, of course, the long-term prospect of being able to raise capital to support the further development of the company. And that's where the exchange is exceptionally strong. Having said that, VC money is, there's a lack of VC money, although it's improved. The exchange has really stepped in earlier in this sector to support these companies in their further development. The reason why we in the Nordics have had such a predominant flow of smaller to mid-sized growth companies in this sector is because we have an exceptionally strong equity market here in Sweden in particular. So we see a lot of Nordic focus on the Swedish market. We see a lot of interest to participate in the Swedish market, because at the end of the day, every household in Sweden owns shares, which means that the retail market is very dominant. There's a predominant number of institutional investors, family offices, etc. So there's an ecosystem here to really support the companies at an early stage access the public markets. This is something that we don't see in Germany. We don't see that in many other geographies across Europe. And we also don't really see it to the same extent in the rest of the Nordics. So that's the reason why we've had such a great number of companies. Of course, great entrepreneurs, great management, etc., great know-how, but that fits well with the equity market that we have. And we will continue to see a good level of activity within the sector, but also other sectors accessing the market, both First North and our main market. And I think many of the companies were already in a long-term discussion with investors pre-corona. And as they continued their dialogue virtually, they could access the market now, because they kept the dialogue, even though virtual, going. So the companies that had not had that dialogue prior to corona will struggle a bit, but I think the world is adapting very quickly, and that dialogue is now going to virtual. Is not necessarily a nice to have, is becoming a new norm, which is creating a lot of efficiencies, but it's also challenging for these companies to get the attention of the investors. So they have to think through on how they leverage this platform in an efficient way.
Understood. Yeah, with so much noise almost in the virtual world, it's critical for issuers to figure out how to tell their story effectively.
Correct.
That being said, Lena, how did Orexo's experience compare to Adam's answer? And what were some of the main objectives that Rexo had when the company went public a few years back?
Yeah, just to give you some background information when it comes to the reason till why we went public, and that took place in 2005, so it's pretty long ago.
Very long ago.
Yeah, but at that time, Orexo was more or less only focusing on research and development, and to get the most out of our assets. Our business model then was to bring projects through all development phases, and then initiating commercial partnerships to get access to markets worldwide. And then in 2005, we were in a situation when we had multiple product candidates in our pipeline, which started to gain traction, and thus they were approaching very costly clinical studies. So to put it very simply, we were in need to fund the business, and going public was of course very compelling from many perspectives, but foremost as it opened the door to the equity market, giving us more flexibility in our quest to also continue to build our company. And it was very interesting to hear Adam talking about the situation when it comes to the work that is included in this process, and and I must say it's related to very hard work, and that's because you need to go through a lot of processes to make sure that your organization can live up to pretty demanding requirements. And at Rexo, we went through this work very closely together with our auditors, but also our law firm. And but what is worth to highlight is when you finally come out on the other side, you are a much stronger company from a compliance perspective, and at least from a theoretically perspective, that should have a positive impact on the overall risk when you are investing in the share, and that is also worth a lot from the investor perspective, as I mentioned.
Gotcha. And, appreciate the background and thank you for that. And, fast forward to today, how has, your objectives and goals changed or perhaps even remained the same? I mean, are you, still executing on the original mission that you set forth in 2005? And maybe you can walk us through kind of, what it's like being a publicly reporting issuer on Nasdaq Nordic.
Yeah, if you compare us to where we were in 2005, a lot has happened, and I will say that we have went through a transformative journey, and that is very much because we took a very important strategic decision in 2010 when Novo Holdings came in as our largest shareholder, and then we decided not only to develop products, but also to commercialize our own products. And that we should do on the largest pharma market in the world, the US market. And since 2013, we have a fully fledged commercial platform in the US, as I mentioned earlier, and there we commercialize Subsolv for opioid addiction since then. And thanks to Subsolv, we have today a profitable pharma business and a strong cash position, which have enabled us to to continue to invest in our pipeline, but also act on opportunities such as entering digital therapeutics, which we foreseen to be the new frontier when it comes to patient care, as scientifically proven therapies will improve treatment results and also access to care. And this space is also gaining a lot because of this tragic corona pandemic. And so to sum up, I will say that today we are in a very uniquely position to take a leading position when it comes to help people suffering from these new time diseases or disorders such as mental health illness, whether it's caused by depression, alcohol misuse, or opioid dependence. So the objectives have changed a lot since we went public in 2005.
Understood, and it's interesting to hear that transition, and it certainly sounds like you're putting together some really great cutting-edge work that's going to have serious and positive impact on communities, not only in the U.S. market, which you highlighted, but certainly around the globe as well. And that transitions nicely into kind of our next topic. Why should issuers think about addressing U.S. investors, and why should they have a presence in the U.S. market? U.S. investors, for what it's worth, most prefer to buy securities that are quoted in U.S. dollars, have U.S. ticker symbols, are traded during U.S. market hours. It's just, much easier. So to provide, a little bit of background, OTC Markets, by definition, is an ATS, an alternative trading system, meaning we operate as an interdealer quotation system, very similar to what Nasdaq USA was like back in the 1980s before they became an actual exchange. So we allow brokers and market makers to connect electronically into our platform to create liquidity versus the exchange model, which more or less acts as a limit order matching engine. But for international companies, and this is highly critical for international companies like Rexo and others. What makes this unique is that companies can cross trade in the U.S. marketplace without having to be duplicated in their disclosure, and without the added costs of reconciling their financials to U.S. GAAP, undertaking Sarbanes-Oxley compliance, etc. So you can utilize your existing Nasdaq Nordic filings and disclosures to be quote unquote public and trade on a verified U.S. stock market, allowing all U.S. investors to have free and unfettered access to your shares. The bottom line is, OTC Markets offers an outlet or a solution to Nordic companies that kind of eliminates some of the more challenging or burdensome requirements when it comes to being public in the U.S. marketplace. So Lena, what was some of the deciding factors for Rexo to join the OTCQX Best Market?
Actually, the decision to join the OTCQX market followed by the strategic mission strategic direction to build up our own commercial organization in the US. We didn't only want to target the US US healthcare professionals, but also to grow our US investor base. That I will say was the main factors that we saw at that stage.
Was it difficult for U.S. investors at that time to purchase your shares without having a security on a U.S. stock market? As we joined the OTCQX market, then we found it more easier to get attention from US investors, as it's our presence there is related to that we get the quality stamp of the company,
as we meet up to very high financial standards and disclosure requirements. And another advantage that we noticed when we joined OTCQX market is that you actually take out the currency risk when you trade in an ADR. And many US investors are reluctant to be exposed to currency fluctuations, and especially minor currencies as the Swedish krona. So that was also something that went smoother. But I will highlight that be part of the OTCQX market gives you a good foundation and open doors to investors, but you need to be aware of that nothing comes automatically. You need to prepare to work very hard to make sure that you have a compelling investor case, and maybe you need to tweak your investor presentation to adapt to the US market. As now you will probably meet investors that have never heard about your company before, and you need to deeper educate them about your business and its environment. And you need also to assess if you can do this by yourself or do you need external help. And at Orexo, 50% of our management team are located in New Jersey, and Bob DeLuca, who is in charge for our US subsidiary, he's also a very good presenter, and we always make sure that he is very well updated with what we communicate to the investment universe. So having a person located in the US, I will say, increase the flexibility a lot to target US investors.
Gotcha. Yeah, I think that's very, very, very critical to note. You know, the fact that you have, you know, US employees, US operations, US customers, a real focus on the US market. You know, certainly having a US stock support those various goals and initiatives is a nice compliment. You know, Adam, given that Nasdaq Nordic serves as the primary stock market, you know, are there any themes or certain benefits that you see from Nasdaq Nordic companies? You know, the handful, about 10 or so that are in Orexo's position that cross trade on the OTCQB or OTCQX markets. You know, what are some of the benefits that you see for companies that do this?
Well, I think I mean, Orexo is a great example. They also are on a commercial stage, which many other companies are not. But I think overall, the U.S. market is key for many other companies, in particular for the sector. Key from a commercial opportunity, key from a opportunity to attract investors that might have a specialty or a sort of a depth of knowledge for that particular type of company, so I think, you know, where the US stands out is the depth of the market, for each different stage the company is in. I think here in Europe, we're improving. A lot of things are for the better, but undoubtedly the US market is the holy grail for many in terms of how do you attract US investors to be engaged as investors for the long term in these companies. And there's only one way to really do that, and that is to make sure that you have a regular active dialogue with these investors. And that means spending a lot of time on the road, as many companies do, you know, JP Morgan event, whatever it is, but with regularity, making sure that you're investing, whether through an IR service or something like that, to make sure that you are present in front of these investors. Because at the end of the day, you want to make sure that they're switched on to your growth story and following it, because the day you want to track them as an investor, the time to market to attract them is lower. And then the question is then, what is it that takes for many of these investors to actually invest? Well, one of the key drivers for companies to actually do a list is that many US investors say, listen, in order for us to invest, we want you listed on Nasdaq in the US, because that we know the US markets, we know the governance requirements there, our overall compliance and comfort to be able to invest in that company, in your company, is for you to actually be dual listed. So that is sort of forcing some of these companies to eventually do a list. The aspect of the OTC market is very similar in that context, in the sense that companies, engage with investors, then they say, well, where do I trade you? How do I trade you? Then the OTC market is an alternative that can complement the local listing. It doesn't replace ultimately a dual listing, which is a different momentum. It's a different exercise. It's a different, it's really the next step. And it's typically a dual listing is related to raising capital, which is something that, which is a different ballgame in terms of, how you achieve that. But from my perspective, making sure that you are accessible to US investors is key. And if the OTC listing or the OTC offering is a complement for these, then they should assess it, because at the end of the day, you're trying to make sure that they feel more comfortable with you as a company from an investment point of view. At the end of the day, a trader will always trade where the market is more liquid. So they will always look at the home market as well. But the fact that they know that the asset is, or the share is tradable in the US dollars locally, creates a comfort zone for them. In terms of, when companies should do a list and when they should pursue a dual listing, in my view, it's different for each company, but it's really typically we see it, in some cases it's even earlier, but typically when you start reaching phase 2, phase 3, you're getting closer, you've built a dialogue, you're able to raise a significant amount, and that significant amount is typically $50 million and above, to really be able to engage suitable investors and advisors around that dual listing. It comes at a cost, but if done right, it can be perceived as an investment over time to really engage with the market. And the additional values you get are, to Lena's point, is that you become visible, you have an additional layer of credibility to really help also the commercialization phase, which is where Orexo is.
Yeah, absolutely. And, some really great points that you raised, visibility and accessibility, very, very important for companies that want to access US investors. And,
and just to jump in, I mean, we talk about typically First North or smaller companies, but the reality is that Genmab did a similar journey. So, I mean, and Genmab is not a small company. They did the second largest biotech IPO of all times in the US recently, and raised over $500 million in a dual listing on Nasdaq. And they did the journey through you guys and also developed that. So again, you would assume that Genmab would be able to attract the suitable investors, but they obviously felt that a dual listing would be beneficial for them as well. So it comes in all sizes.
Yeah, absolutely. And, we have a handful of companies that, use OTC markets as sort of a training grounds of sorts. They join OTCQX, they establish a footprint in the US market, they learn how to, be an issuer in the US market, and then they upgrade or graduate to Nasdaq to do a full-blown IPO. And that works great for some companies, and others. OTCQX certainly serves as an appropriate outlet and platform for their trading and market services. There are a handful of large cap companies that trade on OTCQX: Adidas, Heineken, Roche Pharmaceuticals, BNP Paribas. Large multinational issuers that could clearly qualify to trade on a Nasdaq or New York, but they don't, because they didn't need to do an IPO. They have no interest in becoming SEC filers. So it really is a choice point for companies to to better understand. what's going to work for them and their strategies. So, pivoting back to Orexo, Lena, how have you guys used OTCQX as a tool to engage U.S. investors, and what are your IR plans or strategies for this year and beyond?
Yeah, thank you. Before I answer that, I will just add that when we were considering different options for the US market, we noticed that joining OTCQX markets, then we could capitalize on a lot of the work that we did when we went public at Nasdaq OMX. So that was, of course, worth a lot. It was not related to a lot of work, as we could reuse a lot of the material for Nasdaq. So that is also good to mention. But when it comes to activities to hopefully get more attention from the investor space, then yeah, we do pretty lot with you, Joe, and your team. For instance, when our CEO Nikolaj Sørensen is visiting New York, he used to come by your office and for a CEO video interview that you post on your platform and share with different investor groups. And we are also planning to host road shows in New York City, but that will of course be when this pandemic has normalized a bit. And when it comes to distribution, it's very good to know that all our press releases and interim reports go through your distribution platform, and I think that is a good complement to the distribution that is handled by Cision, that we are collaborating with too. And when it comes to our IR strategy for the US going forward, we are actually in a position when we want to increase our IR activities in the US. And this is mainly driven by our new exciting venture in digital therapeutics, a sector that is starting to gain traction among US investors. As I mentioned, we have just launched our first 2 scientifically proven digital therapies in the US, and a third is on its way. Actually, that will take place in December, and that is for treatment of opioid use disorder. And this, in combination that we are approaching the final development stage for an opioid rescue medication for overdoses, which has proven to be more efficient than the current one on the US market. So that means that we will most likely have 4 new products on in the US in the coming 3 to 4 years. And this is fully in line with our growth strategy to get the most out of our commercial platform in the US. And this will increase also the revenue streams within the company. And I think that is important factors that makes our investment story even more attractive. So yeah, we are about to increase our IR activities pretty soon in the US market.
Excellent, and appreciate the context. And certainly, again, sounds like there's lots of exciting things on the horizon for investors to look at and evaluate when it comes to Rexo's equity story. So I got the the notice here that we're running out of time, and you know, we would like to open it up to Q&A for those in the audience. But in conclusion, you know, any Nordic company that has an interest in increasing their trading volume, getting better liquidity, or you know, feels undervalued and or wants to grow their U.S. shareholder base should certainly explore this option of cross trading on the OTCQX market. To focus in, you know, Nordic companies who have U.S. customers or want U.S. customers, they have U.S. employees, operations, growth targets, etc. You'll absolutely benefit from having your shares traded on a U.S. stock market in conjunction with being public on Nasdaq Nordic as the primary market. So, you know, thank you to Adam, thank you to Lena. I certainly appreciate you guys taking the time to share your insights and expert opinions and advice here. So, Josh, if we have any questions from the audience, it'd be great to chat. All right,
Yeah,
so
I can just echo. Thank you, Joe, for managing this, moderating this panel, and interesting to hear Lena's view as experiencing it live as a company. And I encourage, you know, companies that have been attending this or listening into it to reach out to us as well here in terms of how we can assist. So, very relevant topic, more topical than ever, and hopefully the U.S. elections won't stir up the markets too much, and we will continue to be in the market.
Yeah, good point. Thank you very much.
Thank you. Take care, everyone.
Thank you. Thank you, Joe.
Thank you. Bye-bye.
Bye.